Good afternoon. Welcome to Options Tender. It is Tuesday. I hope everybody had a wonderful Memorial Day weekend, Memorial Weekend. And welcome back to trading. We were off yesterday, and I hope you used that time to relax and be with the family. So thanks for joining us here again. It's May 28th, 2024. We have some very, very important time to price relationships coming in the next few days. And that could be as soon as tomorrow, going through the 31st. And I'm going to show you on multiple time frames what I'm talking about. So on the higher, we're going to spend a little bit of time on this weekly time frame because that's what matters. And when you get time relationships on the weekly, you have got to pay attention. And before I get going there, just know that when you're coming into a time factor, it doesn't tell you directionally which way we're going. But if we're at new highs and we're getting into a time factor, it is very probable that high would be in and we start correcting. And the same thing if you're coming into a low with these massive time frames, relationships coming into a factor, then perhaps you have a low in and you go much higher. So that's what we're going to be looking at. Which way are we going? What's happening? Kind of dissect this, and then we'll get down to the lower time frames, the daily and the 65. And also just take a peek at the VIX as usual. And I also, I don't know if I'll hit it today, but I want to show Tesla as well. Tesla's coming into some really good setups here as well. And there's two scenarios that I think are likely to play out. So stick around here. If I don't get to that, I don't want to make this too long, then check out tomorrow's video. Okay, so don't forget to like the video, and please consider supporting the channel with the $3 subscription on Patreon. So we have SPY on the weekly time frame. We're looking at traditional technical analysis, and right now we're kind of looking at this channel. Okay, we're projecting a channel at this point. We only have 1 point here. All right, but it's likely that this is just an expanding wedge or an ending diagonal. But these, at this point, the top trend line is very valid. We have 3 points touching there. More than that, we have clusters, but 3 main points touching there. So it is price likely to go up to touch another point. We'll have to see. And then we have the 2000 trend line from up top. We have a confluence up here, and this is a weekly time frame. So, this could play out within month, 2 month. If the upside is where we're going to go from here, then we have that 540 to 545 area that I've been harping on for a while. But there might be a pullback first, and that's what we got to watch out first for this to happen, because we've hit some targets, and maybe we just consolidate sideways for a while. And what do I mean by sideways? On the weekly time frame, sideways can be anywhere in this range from 493, the low here, all the way up to the high where we're at. And that could form some sort of triangle, flat pattern, and take time away before heading higher, because we do have targets up here at the 560 area. Okay, so that would take a lot of time. So if we correct in time sideways or price, we could still test these lows here. So that's just something to look out for. Now, why do we just go straight up, or do we start correcting? Well, we have to be on alert, because everything that we have are MACD, bearish divergence. Have we made a new cross yet? No, we're still in the red histogram. Haven't made any green crossovers for any bullish move. A RSI negative divergence. And if we do get our correction, I would suspect if we look to get new highs that we make a lower high here in the RSI as well. So we're back into oversold territory here at the 70 with negative divergence. That's a setup on the weekly. We have not crossed over on the slow stoke, but that would be an early indication that we may have a top in. So I'm going to take a look at some of these indicators and then match it up with the time ratio when we go to the next board. So very similar chart, but the reversal, Williams percent, we're in the oversold. We haven't crossed over. When we cross over this 20, this negative 20, that would be our sell signal. But we can be cautious that we're in overbought conditions. Awesome oscillator, same thing. Negative divergence, what does that mean if you're new? We made a high here. You see the high up here. And then we made a higher high in price. We made a lower high on the awesome oscillator, and that's what's happening on the MACD and the RSI as well. We don't have anything for the DMARC. We do on the monthly time frame. We have a 13 count on the monthly time frame. So that's pretty big going into this time factor for May on the monthly. All right. Doesn't mean the price has to reverse right away, but it shows a sign of exhaustion. Bollinger Bands getting near the top. Are we touching the top yet? No, not really. So do we make a new high and then reverse? Possibly. That's what we're looking for. I don't have a whole lot of answers at this time. The only thing that we have to look out for are these time factors that something's going to happen. And we're in a bullish position, but we're overbought. So that's why I want to give this warning. Use these next few days. Maybe we just glide up going into, what do we have? Tomorrow, 29th, 31st would be Friday. And so maybe Friday's it, you guys. Maybe we float up, get a new high, and then we reverse into the next week. So that would mean that we probably have a pretty small candle here for this week, seeing how it's a short trading week and there's light volume. Okay, now if we do start to reverse, the volume doesn't tell you much to the upside because we haven't traded up there. But so we do have some shelves lower. So maybe all we're doing was making an ending diagonal right now, and we come down to this. Looks like about 510 is the volume shelf, and that coincides with these 20 simple moving average on the weekly. And then you start to get below there, you have support, but you don't have any volume till much lower at the former all-time highs here around 473. So it's still a possibility that we correct all the way down here to the 50 simple. I'm not saying we will. We're in a very bullish stance, but if we have this large correction, we're still in a buy the dip situation where if we get into this confluence, that would probably lead us into the end of the year to make all-time highs in that factor. Okay, so I know there's election stuff like that at the end of the year, so we'll see what happens, but we have to take it day by day. I want to see we have a possible reversal candle on the weekly as well, so that's just something to look out for here. Now we're still inside it. Maybe we make it an inside week and then we get a reversal, or this is a sideways consolidation. We continue higher. If we continue higher, we're going to set up for that 543 area. Now let's go over to the weekly Elliott wave. Okay, so here is just one simple possibility where we just continue to make higher lows. All right, this is the more probable situation because of this bullish kind of sequence we have here. We start breaking the lows here, and then we have to start reevaluating everything. And we still have on the weekly time frame some unfinished business up here at the 560. Now, with our traditional technical analysis, it doesn't really allow us to go straight to the 560 area. We have all this resistance from channel tops and from trend lines from 2000 that connects with the 2021 top here, or 2022, however you want to say it. And let's get back to that board. Sorry. So what's happening is we have a cluster on the weekly time frame. Remember how I continue to do the daily time frames, and the 65 I've done over and over, but I haven't done a weekly cluster yet. And we have one coming up here at 5:30, 5:31. Okay, so you have to be a little bit more forgiving on the days with the weekly time frame, because we can only line up weeks. Okay, so within those weeks, we can have a time factor within this week. That's basically what it's saying. It's not saying 5:30, 5:31. It's really this week we have a time factor. So we can make a new high or make a new low this week, and then something going into next week is happening. Now, we do have time factors on lower time frames, so I'm just speaking the weekly right now. So maybe we get a reversal, and then we go to new highs. That's something of what that would look like. Being our ending diagonal, this would be an A, B, C. So it plays right into this being one big ending diagonal, where every single wave is an ABC, and we already had our ABC into the wave 3 here. And now we're looking for the wave 4 and A, B, C into wave 5. So that would be our weekly target up here at the 560. Seems pretty far away. It's like 300 points away on the SPX. But the important thing is we're at that time factor on the weekly time frame right now. Okay, we have other things that let's see, McClellan summation index and the oscillator. We have some things that we can look at that are just, they're not making new highs. Okay, so this entire move is still not validating this high here. So that's something that we're really kind of paying attention to on this weekly time frame, that we're losing volume, we're losing momentum. We have negative divergence here on this time frame. All right, I can show you so many more of these things, but we're not going to just trust me on that, huh? Or you can look for yourself on some other indicators. So let's, I think that's it for the weekly. Let's move down to the daily. Trend is our friend. We'll start off with the traditional technical analysis. And so far, with this wedge that we're forming, the ending diagonal, this would be our trend line that we really want to pay attention to. Do we break it? That would be the obvious sell signal if we break this trend line, but it doesn't mean that we're going to make new lows. So I have this drawn out here to the scenario where we make that 560 somewhere within time, and that's going into the end of the year here, into November, December. And clearly that sets up for a presidential election sell-off in this indication here. So, I mean, if you want to look at the fundamentals and things like that, that plays out perfectly. Am I saying that it stops right here? No, that's just, I don't want you to think it could come, we can go down to test the 200 at that time. Maybe we get a sell-off. This is an A, B, C. I have some people that are, because it's a 3-wave move, if we get a new low, some people are saying that would be an A into a B into a C, and then we move higher. So there's other ways we can do this if we make a new low. If we do not make a new low, it goes along with our projection that we still have an ending diagonal. And what would that do? Rates are going up. I got the signals going off here. That would just move our wedge. That would just change our wedge if we get a new high. After correcting and making a new high, we're going to move that wedge to whatever low happens. But first, we actually have to break the wedge. So does that even happen? Not necessarily. We can head down to the bottom of the wedge. That would be our A, B, and then continue to fill out this wedge as well. So very, very difficult times. I am short. I am long Tesla. I am short the market. Here is our Elliott wave board here. We have our time factors coming in on the lower time frame. Let's see here. We have okay, not on the daily, it's on the 65. So right now today we have a time factor for the daily. So I don't know if something happens today going into tomorrow. We have the GDP, all these things are happening. So we're just paying attention. That's all there is to it. We have this bearish engulfing candle, so it's a possible reversal, but we need confirmation to go lower. So I do have a projection for this being an A. We get some sort of B, and then a C going into some of those targets, being that we made the first target, second target is at 546, and third target is 560, and again 561. It's a zone. So right now we're right at where we've been having trouble for a couple weeks now, at the 530 area, and we're just back testing it going into this time factor. So maybe this is going to be another daily high today, and then we start to turn lower going into the rest of the week. It's possible. You got to keep these scenarios open. It's usually price drifts to the upside, but it's not to say that it can. 2018, I always remember that when it was around. I was with family and we're out. It's Christmas time, and those holiday drifts that usually happen. The market was tanking, so it can definitely go the opposite way there. So we're still above the 8 EMA. So nothing to see here. You see the candles trying to start to turn red. We're just getting a pause. It's just a very slow price action. So our next time frame, suppose now that we have a time issue here, maybe we reverse today going into tomorrow, and maybe according to the daily time frame, maybe we get some sort of correction into some of these levels into the middle of June. So we're just showing scenarios. If we get a reversal, we don't know where that's going to hold. All right. Going into, let's just go ahead and go to the 65 and let's try to work this out, because we're trading this. So how is this going to help you if we don't know really where we're going? I'm definitely kind of keying in. We have our wedge bottom here. I'm still banking on a reversal to continue. We're in that time factor. Remember that I was talking about next week. We're into that time factor. Again, it's the 29th. That's tomorrow for the 65 minute. I'll show you the time factors on the lower time frame, and it's possible that we have a 3-wave move down here. That's possible that move was over. This is very shallow, but we could still drift to the upside. But this being a 3-wave move, I know it's not impulsive, so this is the beginning of a correction. This could be just a larger degree A. So we have an ABC down here for an A. We broke this trend. We're back testing, and now maybe we get an impulse move to the downside. So that would be an A, B, C. And then we start moving to the upside. That's a possibility. Maybe we correct into the 31st. Okay, so let's go ahead and jump into, just remember, if these hold going into these hold, this is how I have to look at everything. So I know this is tedious. You see the 31st is right here. I have this zone kind of marked off, and we're getting into that zone already, but we haven't corrected yet. All right, so if I move this out to the 31st, if we start, and we don't have to come this far down, it's just projecting. And when we get into that time frame, where are we at in price? So if we're down here at the 382 retracement of this entire move, we could get a violent move down here or lower into the 31st Friday. That could possibly be, maybe it's we get the correction and we open up a gap down on Friday, and we just come into one of these targets, and we just start ripping to the upside, going into the rest of whatever. Okay, so that would mean that the correction is probably over, and that we're looking for the wave 3 of this, or the wave C. I know that's confusing. We're just looking for the next wave up at that point. All right, so if we do get our reversal, I'll be looking for the 31st being a low. If we glide higher for the rest of the week, then I'll be looking for a high into the 31st. All right, that's the gist of all this. And on the even lower time frame, what's happening here after our initial move, the retracement from this initial move, all we did was test all-time highs, didn't quite touch it, but we have a 62% retracement of this move, and that's a typical setup for an ABC. Also up to the 786 is possible too, but the 62 is kind of that golden zone, that sweet spot. So that's where price is holding this entire time right now. So we get above 530 on this low time frame. If you're really, really like a lower time frame trader, you get above 530 and you want to hold on to 530 to look for new highs. Okay, we're having an inside day. As far as I'm concerned, right now I'm holding on to my puts underneath this 530, underneath this high, and I would have to reconsider the time frame of my puts if we get up to this 531. I know it's only a couple points, but time is always against you, and that brings up another factor. Is when you're wrong on, if you're saying, hey, we're looking for a reversal at this 530, and you start to be wrong, you want to get out, because you can always get back into your trade, but you might have a different time factor on contracts if you're trading options. Now, if you're trading stock and you're doing reverse indexes, then maybe you have more room. Maybe you have more room to play with depending on your time frame. But with options, if I'm wrong here, I have to reconsider and then put on some new positions for some later dates. I hope all that's clear. So let me move my little projections here. Again, it could be at any one of these levels, 382 down to this 513. It could be lower, but on this time frame, my assumption is that we're still on the trend here. Here's our trend. You see where the bottom part of the zone is, 514. If you can even spike down and pick it back up as well. So compare those. Here's the 513. And right here, that would be this 530. It was higher 513s, but yeah, that would be this gap right here and this low here. So yes, we could spike down to these zones right here, but if it holds, not especially on a daily close back above, you probably would have some sort of reversal doji at that point on the daily time frame. Okay, and that's where the 200 moving average would be as well. So the confluence down here, if we get this reversal going into the rest of the week, I will be, if we get our reversal, I will be buying this dip into this zone. We fail this zone, I'll have to reconsider. And obviously, and not obviously, I always let you guys know that I have protection. So if we get to this zone, I'll have put protection on, but I will have I'll be looking for setups to the upside. I will have calls on the indices, but I will have put protection out of the money for those puts. All right, hope that was all clear. Let's just check out the VIX real quick and we'll end this video. Really big time factor coming in. So we sort of had this megaphone price action. I believe this move is over. We're correcting this move. And we're just having a little bit of a hard time getting back that old megaphone bottom. Okay, so that's acting as resistance now. So we get above this zone, and we'll call that the $13 zone. Get back above that, and then we know that the price action is going to be correcting on the major indices. So we're forming a base here. You see this base forming. We're getting spikes up, coming back down to this complacency at the 12. It's acting as really good support. Well, we could do that again, and that would, say we're just moving on price a little bit higher in the market, but know that we're building a base, and I do think this move will go a little bit higher, if not all the way to the 15. And it can go higher than that. It just depends on what's happening with the market. So we're looking at this building a base, going higher. We're looking at getting a correction in the market. That's what I got for you. Hope this helps. Hope this is educational. Don't forget to like the video. Consider supporting the channel down in the description.